you have to have a plan B and a plan C. I think we always have to be thinking 1 and 2 steps ahead so that we're prepared to move in a different direction when things do shift because they're shifting so quickly.
So James, the interview with Elaina Smith today, I really enjoyed that.
Yeah, we really just talk about the future of ISO and ISV. What does that look like? What does that even mean? I'm really anxious. I'm like, I don't know if I need to come up with a term or somebody needs to come up with this new term because there's actually not going to be any such thing. So it's like the ISOs that are successful are going to become ISVs and the ISVs that are successful are going to become ISOs. So there's probably a new term in there somewhere. But we talk about that and I was really loved getting Elaina's views. And then of course, for those of you listening, you definitely need to check out Elaina's podcast,
right?
because she interviewed me and I talked about my views on this. So we're releasing them on the same day. So definitely head over there and check that out. Then we get into our questions from the field where I talk about how to overcome the objection of how much is it, or those rates are too high, any of that sort of thing, and how vertical specific software integration basically doesn't eliminate that, but it really dramatically changes the way you have to approach it and the ability you have to kind of get around it. Right.
Yeah,
So
yeah.
I think give us the insider's report today, Patty. What's that about?
Today we're talking about buy now, pay later, and we've talked about this in the past and why everybody should be at least considering offering a buy now, pay later. After you hear some of the statistics from today, you will definitely, I think, be doing that. You'll be looking a lot harder at the possibility of offering it if you're not.
Awesome.
And today's episode is brought to you by Nativia Banking.
Yep. You can head over to nativia.com/banking. I'll also mention here that neither Elaina or Secure Bancard are consulting clients or sponsors or advertisers or any of that kind of thing. Just a fantastic industry person giving us their knowledge for free. And with that information in mind, let's dive in.
Let's do it.
Hey, everybody. I'm here with my good friend, Elaina. How are you doing today, Elaina?
I'm doing great, James. Thank you. How are you?
Doing great, doing great. So Elaina Smith, CFO at Secure Bancard. Today, we are talking about the future of the ISO, and this is exciting for me because I also was interviewed recently on Elaina's podcast. So we're going to try to put these out around the same time so we get to kind of both share our perspectives. So I want to start out, Elaina, just if you could share a little bit of your background for those that maybe don't know you yet or missed the other interviews we've done. Give us a brief overview of your journey in the payment space and talk about the rate of change right now in payments versus kind of even a few years ago when you were starting to get into Secure Bancard and all that.
Right. So we have a wholesale ISO, Secure Bancard. We started it about 12 years ago. My background is in financial accounting, and I started out just in that capacity, just helping with finance kind of things. And over the past, I would say 4 or 5 years, we started to build out our own software so that we could be a little bit more operationally efficient. Kind of own more of the process because we saw things changing even back then where everybody was just basically reselling the same services from the same processors. And there wasn't really a great way for you to distinguish your services between the same person, another person out there selling from that processor. So we built out this software product where we could operationally manage our business and share that control with our partners and the merchants using that operational platform. And I started to get really into the weeds of this. And the more that I got into it with payments, like I think this happens to everybody, the more I became hooked on it. I am obsessed with payments now. I'm really obsessed over it because of the way it is changing. It's never the same. You wake up one day and there's something new that's happening. So I think it's just always something new, a new challenge. The market is changing a lot. And so I think it's just very stimulating for an entrepreneur who is trying to just do the best and show up with the best service offering. It's a great industry to be in. The people are great. So I've just really enjoyed my time here. It beats the heck out of public accounting, what I was doing before, to be honest. So I'm really enjoying it. And I don't think that's going to change anytime soon because it does keep on changing.
Yeah, I love it. And of course, for those that don't already follow you, Elaina, Elena's very prolific on LinkedIn and posting fantastic content about the payments industry. And I think you have such a unique perspective coming from that financial background and everything. So, from your perspective, seeing the market the way that you do, what are the big trends that have kind of caught your attention lately where you look at that and say, okay, that's a trend that's going to impact the future of the ISO? What are those big trends in your mind?
So I think the biggest and obvious one is embedded and integrated payments. And this started a long time ago, actually, back when the smartphone first came out. And, payments became a part of that experience because we were using our smartphone as part of our lifestyle.
Mm.
And I look at payments a little differently than most. I don't think that they should be considered on their own. I think it's on the consumer side, but I think it's important to understand from the ISO side as well. They're part of an overall experience. And the more seamless this experience can be, and the more embedded in our experience it is, that we feel like it didn't even happen, it's just part of our experience, the better they are. So we need to think about payments as part of whatever we're doing, the activity, as an afterthought, rather than leading with the payment, leading with the terminal. If it's just a change in perspective, I think. And the best example, I think, is, driving on the highway and you want to get in that express lane, and you set up your account ahead of time, you get it set up with a card. Anytime that you want to go into that express lane, you get into the lane, and these people that use this lane have no idea what they're spending every month. They just know that they can go in the lane, it hits their card, and it's done. So I think that we just need to think about that kind of afterthought part of payments and the way that it's just this seamless part of the experience.
Yeah, I love that. That's a great way to look at it. Yeah, it's like almost like the payments experience should almost not be an experience, right? It should just be like,
Yes.
it's part of the customer journey. It's a part that, it's like no one, it's really, I love that you said that, because I had never thought of it that way before. It's like, there's no consumer that you would talk to and say, how much do you enjoy paying for things? Like,
They don't.
what do you
They don't.
mean?
They
Like,
just want to live their lives
yeah,
and
like
not
that's
have to
just,
think about that part of
yeah.
it. So as ISOs, I think that we need to enable and empower that experience. I think that's a really important part of it. The other thing is that I think that we need to stop being generalists and start being specialists. And we're generalists when we have a terminal and we go door to door and we try to sell that same terminal into every single different type of business that we walk into. We're specialists when we understand a specific business type, so much so that we understand it so well, we could probably step in and operate that business type. That's how well we understand it.
Right.
And then we embed the payments in it so much. So again, it's kind of an afterthought. And it's just part of the experience. It's part of the way that they run their business, but it doesn't define how their business is run. It's more that we're more enabling the operations of their business, and the payments are a part of that, if we can think of that differently. The other trend that I don't love very much, but it's just part of the landscape, we have no control over it, is the looming threat of legislation. We can't control whether we're going to be regulated or not more than we are today. I think that'll have a huge impact on us if it does. I hope that doesn't happen, because I think that I think the market works well the way that it is. And we've seen some legislation introduced that didn't quite work out the way that it planned. But I try to think about the things that we can control and the things that we can plan for, rather than the things that are outside of our control and we really can't do anything about.
Yeah. It's interesting. I had a conversation with a guy that runs a private equity firm that specializes in payments, and we were just talking about the legislation part. And that's an interesting trend or threat, because it's interesting, not as much even for the ISO, I don't feel like yet, it's more of like, there's like an entire industry built on interchange revenue. And I'm always amazed at how that market doesn't seem to be talking very much about the potential of legislation that would wipe out that revenue. You know what I mean? Like, so I think that's an interesting one. Okay. So for the ISO, right, based on what you just described in these trends, I mean, what are the challenges that you see the ISO facing over the next few years in order to kind of make this transition?
Well, first of all, like I said, if there's an ISO that's just coming out with terminals and trying to sell a terminal, they're facing extinction. They need to change their strategy. It has to be focused on specific business types, solving problems, saving business owners time, helping them run their business more efficiently. The other thing is, if we're leading with price, then we're losing on price. That that died a long time ago, and somehow we're still doing that. If that's and it's part of it. Now, people want value. It's important. They want to know that they're getting a fair deal, but I don't think that can be the only thing that we lead with. The other thing is, with all the acquisitions and consolidation, I think that we need to be mindful of how much control we have over the process that we're selling. I think we want to own as much of that process as we can so that we have control of that. And if that's not possible, then we're doing business with people that we know and understand to an extent what their long-term goals and vision are, because things can change. You know, somebody can come in with a money truck
Right.
and make them an offer they can't refuse, but that has a real ability to affect our business model.
Yes.
Because if we're selling a major piece of the process and it's based on maybe this processor or this gateway, and they decide to go direct to merchant on their own, or they try to circumvent us or do something that really impacts our business, that could really be detrimental to us. So I think that's just part of the new landscape that we need to be careful of.
Yeah, for sure. Got to navigate that. So on the flip side of this, though, it's easy to talk kind of doom and gloom and like, oh man, everything is changing. And but for those ISOs that make these changes, that adapt, right? What do you see as the opportunity? What's the future look like for the ISO owner that says, okay, yeah, we are going to focus, and we are, like, what does the future look like for those ISOs in your opinion?
I think for us to understand the size of the opportunity, all we have to do is think about the last payment experience that we had that was poor. For me, that was this morning. I received an invoice from a company in the payment space that did not have a link to pay on it. All they had was their routing and account number for me to make an ACH payment manually to them. And that happens more often than you can imagine. So
Yeah.
I think the opportunity is huge. We just need to, look for the opportunities and start to build out, find the problem and solve the problem.
Yeah.
I think the other thing, like we talked about before, is just focusing in on a niche. What is
Right.
it that problem is that we want to solve? And then we become experts in that niche. And again,
Yeah.
we need to know so much about that niche that we are
Right.
experts in that
Right.
niche, and we make payments an integrated part of that experience.
Yeah, one of the thing I wanted to point out, I was talking a little bit about this in the podcast I did with you where you were interviewing me, but I just thought of this, like, I think people may not understand the opportunity because they feel like, well, Square and Toast and Stripe and Adyen, et cetera, they've gained so much market share that it's like, we just got to keep fighting over this little sliver of the market, until it shrinks to zero. And it's like, no, not at all. Square is in huge trouble because like there's a whole other wave coming of like these really specific niches, like you just said, where there's solutions that when you go to a merchant using Square today, it's like, I can't compete with Square. Well, yeah, that's because you're offering a terminal and they have a little point of sale system, right? But when you come in and offer them a specific vertical solution for their business that has built-in accounting, payroll, insurance, whatever, like they're going to be like, Square, what? Who cares about Square?
Yeah.
So there's huge opportunities. This next shift is going to wipe everybody out, not just the legacy ISOs. It's going to wipe out a lot of these general purpose ISVs and give you an opportunity to compete in those markets as well.
I think Square is a great example of why the general strategy doesn't work anymore. Square doesn't even, I know they have inventory features and
Right.
online that you can integrate, you can do websites and whatnot, but they don't really do anything for specific verticals. I think a better
Right.
example of one that's trying to do that a little bit more is Clover, with the apps and whatnot
Yes.
that they
Mhm.
have that are targeted to,
Mhm.
and I think that's going a little better than, I don't know, this is just my perspective, but it seems like that's a little bit better received than Square with its general approach of trying to be everything to everybody. I think that's a failing strategy in this
Yeah.
new ISO world that we live in.
Yeah, like I tell people all the time, I think Square and Intuit are both going to do fantastic, right, moving forward, but not in any way of what they are today. I think both of them are going to become this platform, right, that's really great at serving software companies with APIs and things of that nature so that they can be customized for verticals. But I think you're right. And I think, like Square realizes this. They're acquiring as fast as they can and trying to bring in companies with vertical specific. But again, it's a losing battle. You can't make software for thousands and thousands of sub verticals. It's just, it's not possible. So, okay. So from an operational perspective, which I know is your area of expertise here as well, what do ISOs need to start doing now to kind of structure themselves correctly for this shift? If they're like, okay, yeah, we want to keep selling to merchants. Okay. What do they need to do?
Well, I think the first thing is realizing that so many ISOs just are so obsessed about sales and they neglect operations altogether. The first thing is to just think about operations. It's an important part of the process. If you go through the onboarding experience for someone who's integrated to Stripe or Stripe directly, and you're trying to onboard with them, it's a very smooth and easy experience.
Yes.
And then you compare that to our legacy processor experience for most of the ones that are out there, and it's night and day. I mean, it's not even close. So I think that we need to put ourselves in the seat of the merchant and try to start thinking about, how do I make this an easy experience for them? I think another thing that we do too often is relying on processors to deliver all of our operations. And again, it's legacy processors. They haven't changed anything since, I don't know, 1988 for the most part. I mean, they just haven't innovated on that part of it. And don't get me wrong, they're consistent, they're reliable. There's a reason they don't change those things because they have the uptime, and we all want that uptime. But maybe we need to stop relying on them so much and start to build out our own operational processes that we can, have a little bit more control over the process. So I would say make an investment if you can in building out your own operations. That's what we've done for ourselves at Secure Bancard. We tried to take everything that we could away from the processor and bring it in-house so that we do our own billing, we do our own merchant funding. That gives us an incredible amount of control so that if I have to do a bank account update, it's a 5-minute update rather than having to go bang on my processor and do it there. So try to take control of those processes where you can. The other thing I would say just in general is, let's stop doing it today because we did it that way yesterday. This is such I've never seen this be more pervasive as it is in the payments industry. Because it's working, we just keep on doing it the same way. I think we all have to take a step back every now and then and come in with a fresh set of eyes. That's why I love when people outside of the payments industry come into the payments industry with fresh eyes and revisit, why are we doing it? This doesn't make any sense. This is the slowest way to do it, or this is the most inefficient way to do it. They come in with a fresh perspective and, make great suggestions, and it gives us an opportunity to look at it in a different way.
Yeah, and at the end of the day, I mean, that's exactly what Jack Dorsey did with Square, right? And so he came in and he was like, "Hey, I don't know anything about payments," And he was like, "So let's just make something that makes sense." And at that point in time, that was kind of, and he wasn't the first PayFac, of course, but the first really, really big one. And came in and said, "Yeah, let's just get rid of all this stupid stuff that's going on behind the scenes and make it really simple." And that resonated for the last number of years, and it's worked really well. So. Okay, let's talk ISVs for a minute. So we have a lot of ISVs now that are in our audience and listening in. I'm kind of curious. I believe, of course, the winners are going to be the companies that bring the ISVs and ISOs together and kind of bridge that gap. What would you say to ISVs that are looking to, boy, they're trying to, figure this out? We see big players like Clover that are coming in and doing this. Talk specifically about distribution. How do you see this playing out? Are the ISVs and ISOs ever going to play nice together? Are they going to stay separate? Like, what do you think this is going to happen in the market?
I think in the past, what we saw is software developers and payments professionals kind of guarding their own space and not really sharing knowledge very much. And I think that was honestly more from the payments industry kind of people did not want to share knowledge with software developers because they didn't want them to know the potential for income. I think that we kind of kept them in the dark a little bit, is just again, based on my perspective coming in from the outside. And I think there's so much to gain when we come together and talk about, mutual goals and what our visions are together and trying to work towards those together and opening the curtain and, showing, showing what's there instead of being so dang secretive and trying to hold it back. I think we really need to be more open with the opportunity that's there. And when we do that, we have an opportunity to grow together. And until we do that, we're going to keep on operating in these two different worlds. I think developers need us because payments knowledge is not something that you just, Google. It's not even something that you can work in for a year or two and really have a grasp of the entire situation or talk to an expert and have them help guide you. It is so detailed and complex that you need that expertise. Same as on the other side, as payments people, we're usually not the best software people. So we kind of need those two things to come together. And I'm always of the mindset that, we have to have relationships with each other where they are built to win in the long term. And it's a win-win. It's not,
Yeah.
I'm, going to give you this little rev share and I'm going to just hope that you never find out that there's something better on the other side. No, I think this is fair. This is why I think it's fair. This is what I'm bringing to the table. This
Right.
is what you're going to bring to the table. And this is how we work together and move forward together. So I think we just need to work better together. It's not complicated, but somehow we've made it super complicated.
Yes, no, I agree with that 100%. So speaking of ISVs, one last question on this topic. Many ISVs are, really the future ISOs. We say, what is the future of the ISO? Well, in one way you could answer that is it's an ISV. That's like, so the ISVs, a lot of them are bringing payments in-house and they already have an internal sales team and they're an ISO. I mean, that's, it's so funny. I think our industry can kind of get trapped in these old ideology of like, well, that's terrible. We can't have an ISV becoming an ISO. Why not? You started an ISO. Why can't this other person start an ISO? The fact that they happen to own a software company, great, good for them. So those that are coming in though, they do struggle. Like you just mentioned, like they don't understand payments. You know what I mean? So what advice do you have for the ISV that's getting into this or trying to monetize payments? What would you tell them? What are the things that they need to understand as they move into the payment space?
If you're going to bring it in, you need to hire payments knowledge. It's make or break. You have to have someone running this that knows what the heck they're doing with payments. You can't just try to wing it. We've even seen very big players, huge, publicly traded players that tried to acquire and then didn't bring in the right talent to run that and then ended up having to spin it off for a loss. So that's a great example of, if you don't have the right people to run it and you're just relying on you're just going to monetize payments and you don't really fully understand what that means, that is a failing strategy. I also think that technology companies sometimes just think that payments is as easy as providing an API. Well, what does that API do? Why was it built that way? What is the reason behind what's there? And understanding that piece of it. It's not just necessarily plug and play. There's a lot of complexity that goes into how you have to accept card payments, how they need to come through and how they need to come across, the whole underwriting piece of it that can get, the risk part of it. ISVs usually don't understand what kind of risk they're taking on and what that might mean for them until they might get burned if they are, bearing the risk. So there's just a lot of complexity and you don't want to cheap out on not hiring talent to be able to understand that and cover that.
Yeah, it's like if you do it right, it's incredible. There's so many ISVs where I feel like there's like these layers, right? They come in and they're like, okay, we just need to integrate payments into our system, and they do that, and then they're like, wait, what's underwriting? And then because no, it's like, oh no, and then they're like, okay, hey, I think we figured this out. We got underwriting, and then they go, oh wait, but none of our merchants are actually processing payments, like. And it's like, right. So they go back to their board meeting after 6 months and it's like, did you monetize payments? Yes. Oh, well, how much of your revenue is running through your own payment processing? 4%? Yeah, it's like, well, that doesn't do any good. Yeah, so yeah, there's these layers, and I think they got to understand how to peel that back. So, all right, let's go back one more time to the ISO, and then we'll be done. Final tip that you have for the legacy ISO, they've been in payments for 5 or 10 years, and they're like, okay, we believe everything you guys are saying. We need to make this transition. What's your advice?
I think the biggest thing is prepare to be resilient. In this changing landscape, shots are going to be fired. We're going to have to deflect things. We're going to have to pivot. You have to have a plan B and a plan C. I think we always have to be thinking 1 and 2 steps ahead so that we're prepared to move in a different direction when things do shift because they're shifting so quickly. I think that's just... I think about that song, Titanium, where it's fire away, and you're just deflecting because that's what it's feeling like now is the market is contracting a little bit with all the consolidation and whatnot. And vendors and providers that we used to rely on are selling out and, taking their share and taking money off the table and whatnot. And we just have to try to, again, own and control as much of the process as we can to try to prevent that.
Good stuff. Elaina, it's always such a pleasure having you on the podcast. I always enjoy our conversations. For those that want to learn more, want to follow you, learn more about Secure Bancard, where would you send them?
Sure. Like you said, I'm on LinkedIn quite a bit. That's a great way to reach out to me. Our website, securebankcard.com, has a lot of information about our company. We're trying to work with seasoned and veteran agents and sales offices that really not new to the industry. They don't need pricing help and that kind of thing. They
Right.
just really want to board business quickly and have it process efficiently, have control. Again, our whole thing is control, have control over the process. We want to share that control with them. So that's really what we're all about. And we're just building one at a time, basically.
Love it. Elaina, thank you so much for taking the time today. I really appreciate it and wish you guys great success.
Thank you, James. Same to you.
Hey, everybody, we're back here with Vlad Sadovsky, CEO at Nativia, who tells me he has a very exciting announcement today. So what's up, Vlad? What do you got?
Well, James, I promised you that we're going to start with some interesting promotions for our Nativia professional card.
Right.
Right. So first of all, the new thing is that our new Nativia professional card are finally here. It's a production version. It's full of matte finishes. Looks like this.
Nice.
And for these particular events that we're about to hit, starting with Northeast Acquirers, we are going to do something really special for anybody that's going to be a card holder. We are starting a game.
Okay.
So you can go to nativia.com/game on, and our first prizes for our card holders are going to be a BMW i4, a Tesla, and a scooter. Everything is electric. All is paid by Nativia.
Okay.
Rules of the games are very simple. You know our events are the best events you can find on the regional shows.
Right.
We encourage you to sign up, participate, become the card holder, and get entered into the contest of Game on Nativia.
Okay. So let me understand this, right? So
Yeah.
I got to have a professional card. So that's nativia.com/professional. I'm
That's
a
right.
card holder. Then I go to nativia.com/game on and I sign up. And you're saying that at some point there's going to be this like a drawing or something, and I can win a BMW. Is that what you're saying?
No, there's no drawings. It's a full game. And the game is you got to accumulate the amount as many points as you can, and the winner
Oh,
gets
okay.
the card.
And give us some examples of how we accumulate points in this game.
Very simple. First, attend the event. You get points.
Okay.
Second, on the event, we will be playing games. Last year, I was playing for the winner in the ping pong contest.
Right.
So the winners were going to get extra points. And then finally, last but not least, during the between the events, we will be actually dropping emails to all the participants that they can make extra points for special actions. I cannot tell you what the actions are,
Ah,
but I
okay.
can tell you there will be special actions that you could take, do, and participate to get you those points to win into the contest. So
Okay.
everybody's going to be equally reimbursed. We don't care if you're an ISO. We don't care if you are a secretary for an ISO. As long as you're on the event, you will be entitled to. And if you're not in the event and you're listening to this, just sign up, and I'm sure there will be special actions that will make you your points. And of course, the number one point gathering is spend on our cards.
Yeah, of course.
Spend
Awesome.
as much as you can, get your payroll in there, everyday purchases, gasoline, whatever it takes. We will get you those electric vehicles that we think that are going to change the way that you drive going forward.
Awesome. All right. So let's get those links one more time. So it's nativia.com/professional. That's where you go to get your professional card, which is for payments professionals if you haven't done that. And then it was nativia.com/game on. I'm assuming that's all lowercase, all one word, right?
That's correct.
All right. So nativia.com/game on, get signed up for the game. And then you'll see, I'm sure, all the point stuff. And then you head over to the NEAA. And of course, attend Nativia's amazing party, which I'm sure we'll get more details about that as well. So Vlad, thank you so much for this announcement. Very exciting. I'm sure all of our listeners are pausing right now and going to nativia.com/game on to get signed up.
Thank you very much, James.
So, Patty, in this little installment of my mini series on overcoming common objections using, vertical specific software solutions, I'm going to talk about one of the biggest common objections, the most common objections, most popular ones that you actually just eliminate when you do vertical
Okay.
specific software, and that is, how much is it? What is the rate? It costs too much. I don't want to switch because of the rate. All of those types of things.
Mhm.
Now, I say you eliminate them, but maybe that's a little bit of a strong word. It is still going to come up, of course, in the conversation, but it really becomes a non-issue. In other words, if you're hearing from a merchant, we don't want to move forward because of the price, because of the rates, and that's
Mhm.
why you didn't get the deal. I can tell you right now, you're not selling vertical specific solutions, right?
Right,
So
either that or you have a merchant that's BSing you.
yeah,
Um,
yeah, and even that, it literally just doesn't happen. So like as an example, when we're selling, again, I keep going back to my own example because that's where we do the most sales here, but selling self-storage property owners on software, I mean, we do get people that will say, "Oh, well, you have a competitor that charges 2.9% and $1 a transaction." Like that's a real common price in our industry.
really? Wow.
Yeah, which is pretty crazy. And we're like, "Well, we charge 3.99%, but the thing is, we pass that cost on to the customer. So when you have dual pricing in the mix, it's kind of like a no-brainer, right?
Right,
And
right.
what happens is, even though they bring it up in the conversation, it's so easy to circle back to that later to say like, okay, well, before we get into all the pricing stuff and everything, I do want to just kind of check some boxes here and make sure that we have all the features that you're looking for, and then we can certainly circle back and have that conversation. Now, what about this? What about that? What do you need
Mhm.
in terms of? And so what I
Mhm.
find is, in sales, one of the keys to success in sales is being able to pivot like kind of like you're escaping. Like the way I look at it is, it's like every objection that comes after you is almost like someone trying to attack you,
Mhm.
And it's
Mhm.
like, how do I run away? Like I need to get
How do I
away
dodge
from
that
this.
bullet, or how do I get away from that gunfire, right?
Yeah. And so what's interesting in sales is that the key is
You're
details. And
right,
and
right, you're putting up the details instead of putting up a deflector, right?
Right. And so when you're trying to make a sale, it's very hard when you're selling a standalone terminal to kind of come up with something else. I mean, I've met some people in the industry that are much better at it than I am, but it's like, well, the rates are too high. And you're like, what are you going to say? Like, well, yeah, but look at the color of these buttons. Like, what do you got? I mean,
Right, right,
there
right.
are some things, and of course, dual pricing is a big one. But what do you do when they've already got that, as we've talked about before? So
Mhm.
you're starting to run into some issues. Whereas when you're selling vertical specific solutions, I mean, there are like 100 really relevant, interesting details that you can, Oh, I'm so
Right,
glad you brought that up. Let's circle back to that. But what about this feature? What
right.
about this? Do you have that? What about this report? What kind of reports do you run at the end of the day? It's just like, wow, there's like a million things you can talk about. And then when you have that value built up and it's like, oh, wow, they actually really do want your solution. Then you circle back around and say, okay, now last thing I just want to run through real quick with you here is, let me explain how this dual pricing thing really works. And
Mhm.
you just explain it. And at that point, you've already talked so much about the value. You've got them so interested that it's unlikely that the price is going to be the determining factor. Again, maybe you have to lower it a little bit or, meet them halfway or something, but you're certainly not going to be like, well, I'm going to have to beat my competitor's price. It's like, no, like if you're actually offering a really good, what I call a sub-vertical solution, meaning, it is really tailor made for them. You're selling pizza shops on a system that's built for pizza shops,
Right, right.
this is for them. All of a sudden, a lot of their issues are going to go away when you talk about, like if I was selling a pizza shop on a point of sale, I would say like, how does your caller ID work right now in terms of popping up the most recent items that people have purchased?
Mhm.
And they're like,
Mhm.
oh, well, we don't have that. Oh,
Yeah,
wow. So
right.
so do you realize that the average order, when you do that, the size of the average order increases by 20%?
Yeah, I
So
bet you it does. I
yeah,
bet you it
so if I
does.
can, if I can increase your revenue by 20% without even you getting any new customers or doing more business, just increase it by 20%, most of that drop into the bottom line because you already have the cost of fulfilling the order. What are your thoughts on what that would do? And it's like,
Mhm. Mhm.
now you circle back around to price after that. They're not going to care one bit. You're growing their revenue by 20%. Like,
Right,
who
right.
cares if it's 50 basis points higher? They don't care about that. So again, vertical specific solutions, when you bring that into the mix with these objections and rebuttals, it just changes the approach that you're able to take.
Here's a bit of good news for acquirers wishing to get into the buy now, pay later market.
Okay.
The competition is slim.
Really?
Yet overall, shoppers are increasingly using buy now, pay later,
Hmm.
like they might use a credit card frequently and on everything.
Wow.
This from two recent studies. A survey by payments.com just found that while 56% of acquirers say they support buy now, pay later tied to general purpose credit cards, Payments' own research shows that just 8% really do.
Wow.
And despite that deviation, 39% of acquirers say they have plans to offer buy now, pay later.
Interesting.
And here's why that's a bummer. Nearly 7 out of 10, or 68% of merchants, say they would sell more higher priced items if they had the ability to offer buy now, pay later.
Wow.
Isn't
What
that
a number.
amazing?
Yeah, that's a big number.
Let me just repeat that. 7 out of 10 merchants would sell more higher priced items if they had the ability to offer buy now, pay later.
Well, and it's not just that they would be able to, it's that they believe that
They
would be able
believe
to.
they can sell those products.
Yeah, which means
Yes.
you go into that merchant and say, hey, are you familiar with buy now, pay later? I offer that.
Right.
7 out of 10 are going to believe that you giving them that is going to allow them to sell more higher ticket items.
And I think that, you and I have talked about this a lot in the past about why our folks should be out there selling this.
Yeah.
And here's some other interesting data points. 25% of the firms offering buy now, pay later cite client retention as the primary benefit. 39% make sure consumers know they have the option prior to even getting to the checkout.
Wow.
1 in 5 Americans has used the product in the last 2 months,
Wow. Wait, what?
according to the New York Fed.
That's crazy.
Yep, 1 in 5. Now, the New York Fed study does suggest that the pricing is across the board.
Right.
Sure.
Sure.
What they do it for. So I will tell you,
Right.
for example, I did it on a $50 purchase just to see how it worked.
Right. Sure.
So,
Yeah.
and a lot of people that are doing it are lower income people. So,
Right. So
they're
there may
gonna
not
do
be,
it.
but still,
But still,
anything that 1 out of 5 people are doing, it's a big deal.
yes, it's amazing. And as I said, folks with limited credit access are most likely to use it, and the purchases they usually make are under $250. Now, despite the growing popularity of buy now, pay later, only about 69% of acquirers say they find the return on investment somewhat satisfying, while less than 19% say that it doesn't support the current hype.
Interesting.
Anyway, taken together, all this data, in my mind, shows there's a strong consensus forming among acquirers that offering installment payment options across general purpose credit cards, merchant cards, it's a worthwhile pursuit. If you're not doing it, you're kind of losing out on something potentially really big.
Yeah, I think it's interesting because it's a way for the acquirers to get into kind of a side of the business that they haven't been able to get into.
Exactly.
And I think for our audience too, it's like you got to understand. I look at this kind of almost like gift cards, meaning you may or may not make a fortune off of like the buy now, pay later itself.
Right.
But it's one of those things that like by offering it, and it will eventually become a requirement. It's one of those things where eventually it'll be like, well, I would switch to you, but I have buy now, pay later through my point of sale company or through my processor. So it's like, one of those tools you have to have in your belt,
Right.
right? If you want to go out there and sell payments. So that's interesting.
I agree.